It's Friday, baby, the 22nd of Feb 2019. Here is your crypto market update in 13 minutes or less. Let's dive right in. So today, BTC dominance sitting at 51.9%, 24-hour, $24 billion volume is starting to decrease slightly over the last couple of days, and $134.4 billion market cap. As we go to look at the top 100 cryptos, biggest winners for the day: Cash, VeChain, Status, Binance Coin, Wave, Sire, Odom, Veritasium. Little recovery after a bit of a drop yesterday, as we saw as well. Going to the biggest losers of the last 24 hours: Crypto.com, Komodo, Tomo Chain, Factor, Moke, Walton Chain, Populous. Some of these coins I've never even heard of before. Wax, Repo, Cardano, round them out. Let's have a look at ETH. What's been going on with ETH over the last 24 hours? Well, breaking down the 4-hour on ETH at the moment, we have had some good trades on this over the last few weeks, and it's still giving us the goods. So Wednesday, we got a re-entry off the 38, with the short-term area of interest being the bottom of supply at 0.3724. Our special algo that we use as well, giving us a warning as volume dropped. We exited for a 27% profit take on 10x from our entry. It just wasn't ETH's time to punch through, so we figured let's take some profits and let it have another go. Now out, we're waiting for the 30 to 50% hit again over the next few days, laddering in on a lower leverage this time, and giving it some more time. If we do not get another entry off the fibs and price starts to breach supply, we will be looking at placing buy stops over at the 0.38 once we see some signals of that supply breaking. The daily is spitting out some high volatility candles at the moment, consolidating in this region, but volume is on a steady climb, which could be an indication that we are going to push up soon, leading into the hard fork in another 7 days' time. So came down, we bounced off quite well from here. As we start ranging up, we're continuing it, hoping that it may continue this uptrend through this supply. We'd like to take that percentage if we could. Going over to EOS. EOS has hit our targets to jump back into the market. The CCI showing a nice steady reversal, but volume still dropping, which isn't the best sign. So we will be keeping a close eye on this trade in case it takes a turn for the worse. Expecting a small downtrend on BTC means alts will most likely follow suit. So not expecting this to 100% take off from our entry just yet. The 4-hour chart showing some exhaustion on this mid-term uptrend, and on the smaller time frames, we did get a double top at 9853. We have a close eye on our trading algo at the moment, which is signaling this uptrend coming to a standstill at the moment. So this trade has become a little more risky than before, although it could just be a short-term pause or a consolidation as the market takes some fresh orders of distribution before making another move. You know, and as much as I would like to say that this, to give this some time to breathe, EOS tends to have no chill when it is set up like this. It can often just shoot off earlier than expected. So there will be, we will be laddering our buys in smaller increments with a solid exit strategy in case it takes a turn for the worst. Proper risk management is the key for a risky trade. So always have that risk management in place. We cannot stress that enough. The daily chart is showing potential for a harsher retracement back to the 009 mark. So that's our next re-entry point if we break down from here. BTC. Let's have a look at the king, baby, see what he is up to. After our previous trade played out really, really well, we were looking for a new entry back into BTC. Yesterday on the 4-hour, where we were building a rising wedge, so we switched to our strategy, waiting for a break-up, close above to re-enter for a push to the next target around 4,200. We did get a spike up, but it was instantly hit back down with, again, most likely a stop hunt to clear out the order books for a little for margin traders. So we have since broken down from this rising wedge, which in our opinion will kick off a short-term downtrend. Our new target for re-entry is between the 38 and the 50 retracement on this last leg at around 3750, 3800 mark. We will be keeping a close eye on the CCI and volume to make sure we can see some short-term reversal patterns. So the next leg up being back to the 4,000 supply zone with eyes on for a break, or again looking for a double top rejection, in which case we will take profit and flip our bags short. The daily chart is showing a nice big red candle now with volume tapering off after that rejection at 4K. Although the overall market direction is still in an uptrend, but a healthy retracement is needed. Remember, after a good uptrend, there is usually a downtrend or a pullback as well. Too risky right now, in our opinion, to open a short. We would prefer to wait for the trade to come to us and open a long position back up to the 4,000 supply for a 5 to 6% push. We will reassess on the smaller time frames if we think the move is sustainable to reach the 4,200 mark. If the 61.8 can't hold on the retracement, then we will revisit our analysis for a different approach. All right, let's dive into the news for the day as I bring up the tab. South Korean capital to invest over $1 billion in fintech and blockchain startups by 2022. So the Seoul Metropolitan Government has announced plans to invest more than $1 billion into blockchain and fintech startups by 2022. According to the release, the South Korean capital's government plans to use the Seoul Innovation Growth Fund for startups that have various investment problems with Series A funding rounds. The fund last year will primarily focus on startups related to blockchain and fintech industries. And we know how hardcore South Korea are on blockchain. Samsung, obviously being a Korean company with filing a ton of blockchain patents. We've got ICX doing really great things over in South Korea as well. So a very blockchain and crypto focused country. And this is only more of a good step in the right direction for Korea. So the Seoul Metropolitan Government announcement underlines that the average investment per company in London and Silicon Valley is approximately 6 to 7 million, while in Korea it is only about 1.1 million. Jo In-dong, the head of economic policy and department of the South Metropolitan Government, said innovative startup investments will be the cornerstone of corporate growth that creates innovation in our society and will be a crucial driving force for the growth of innovative venture companies. We will expand our investment, stimulate the startup investment market, and create an entrepreneurial system. So very, very good for Korea. Great to see stuff like this continually coming out of the country. Bitcoin transactions per second approaching an all-time high. So Bitcoin transaction rate is currently at its highest level since December 2017, despite a 14-month-long bear market. With transaction per seconds on the rise, the top-ranked crypto is also experiencing a resurgence in both actual use, especially in emerging markets, and interest as seen in the latest Google search trends. So data from blockchain shows that Bitcoin's transaction rate is currently at 3.8 transactions per second. The figure represents the highest BTC transaction rate since its all-time high of around 4.7 in mid-December 2017. After the initial price crash of February 2018 that took BTC to 6K, the transaction rate also fell. However, since then, BTC's per second transaction rate count has been rising steadily. So despite the steady increase, transaction fees have remained relatively stable on the lower end of the spectrum. In 2017, as the daily transaction volume rose, so did the average fees paid to miners also increase. Though by the time of the eye-catching bull rally in late 2017, fees had topped $50 on the average, a massive increase from sub $1 levels before the surge. The fact that the BTC transaction volume without any corresponding hike in fees shows that capacity boosting upgrades like SegWit are having an effect. Very good. Let's move on to this next one here. My Ether wallet is set to launch fiat withdrawals with no KYC needed. The ETH wallet provider, My Ether Wallet, and crypto finance platform Biddy have unveiled a fully regulated crypto to fiat withdrawal system, which does not require users to pass Know Your Customer checks, the KYC checks. The exit to fiat gateway will allow crypto holders to exchange their digital assets, including BTC and Ether, into euros or Swiss francs. The current limit for KYC-less transfer is anywhere up to 5,000 francs, roughly $5,000 at the present exchange rate. So this exit to fiat gateway is a game changer for cryptocurrency users around the world because it allows people to exchange crypto to fiat without needing KYC to be verified. No duh, said Kasala Hemachandra, CEO and founder of My Ether Wallet, in a press release. This is all fully regulated, the companies say. Biddy is integrated with Muse version 5, allowing the wallet interface to offer the gateway without any KYC requirements. The company, with a worldwide network of crypto ATMs in various Swiss cities, including Zurich, Basel, and Zug, has established presence in the country in compliance with the Swiss anti-money laundering ordinance. So it's interesting to see that. Now, I wonder how this will affect the adoption of stuff like this, particularly in those European countries. Be interesting to see how it goes over the next few months. This is great news. Japan obviously is a very blockchain-focused and crypto-focused country, as is Korea that we spoke about a moment ago. But the megabank, the 1.8 trillion Japanese megabank, is launching a stable coin for payments and remittances in March. The massive Japanese megabank Mizuho Financial Group, that manages over 1.8 trillion in total assets, will launch their own stable coin cryptocurrency on March 1. This is according to a report released on Feb 21 by local financial newspaper Nikkei Asian Review. So as per the report, the new stablecoin dubbed J-Coin will be used for payments and remittance services starting March 1. The financial group has partnered with 60 counterpart financial institutions which host a total of 56 million user accounts and will have direct access to the new J-Coin currency platform. As reported, each existing bank account will be directly linked with J-Coin digital wallets, making it easy for the stablecoin to be adopted by the customers. J-Coin currency will be managed by users via a dedicated mobile app dubbed J-Coin Pay, which will feature retail crypto payments via QR codes at checkout. So in an effort to bring this plan to reality, the banking giant is establishing connections with retail industry players such as popular Japanese convenience store Family Mart, electronic retailer Bic Camera, and East Japan Railway. So another point worth mentioning is that J-Coin Pay will charge merchants lower transaction fees than credit cards do, which will be somewhere between the or below the 2 to 5% mark. So what do we reckon? Do we think J-Coin will catch on amongst mainstream Japanese citizens, or will J-Coin take people's interest away from Bitcoin, or even bring more people through to Bitcoin? I'd love to know what your thoughts are in the comments below. As always, trade smart, trade safe, trade to win. And you can come and catch us over at unitytradinggroup.com. Come and jump into Discord, have a chat. Let's talk crypto. Let's share some charts and crush this market together. Have a wonderful weekend. We will be back on Monday. Until now, trade safe and bye for now.